Hey everyone, welcome back to today's Explainer. So let's jump right into our daily market update for July 16th, 2026. If you've been watching the tape today, man, you already know it's been a total roller coaster. We're breaking down a highly volatile session where the Sensex briefly surged almost 600 points early on, only to just surrender almost all of those gains before the closing bell. It's exactly the kind of day that really tests your conviction. So let's use the data we have to make sense of what actually happened under the hood. All right, looking at the closing numbers, we did manage to close in the green today, but, well, just barely. The Nifty 50 tacked on a modest 11 points, putting it at 24,870. That's up just 0.11%. The Sensex, basically the same story. It eked out a tiny 0.17% gain to finish at 77,185. But what's actually interesting here isn't just those top-level numbers. It's who did the heavy lifting to get us there. Banks, financials, and oil and gas. They literally carry the market today. On the flip side, if you were looking for help from metals, IT, or FMCG, yeah, you were out of luck. They completely sat this one out. So who's actually driving these moves? Well, we're seeing this dynamic play out that we've been tracking for a few weeks now. It's this great standoff between foreign institutional investors and domestic institutional investors. The FIIs, they're staying noticeably light right now. They're kind of hovering under what we're calling this crude cloud, just hesitant, risk-averse, and they actually pulled out over 700 crore in the cash market. But right across the aisle, we've got the DIIs quietly, consistently buying the dip. They scooped up over 700 crore themselves. So they're essentially cushioning the tape, absorbing all that supply and preventing a much sharper correction. It is a fascinating tug-of-war to watch. Moving on to Section 1, Macro Drivers and Crude. Right now, Brent crude is parked right around $85 a barrel, and this is almost entirely driven by that lingering US-Iran and Hormuz risk premium. Just to put this into perspective for you, I pulled this brilliant estimate from Nomura. A $10 per barrel rise in crude cuts the combined EBITDA of oil marketing companies by, wait for it, a massive 77,000 crore. That is a staggering number. So what does this actually mean in practice? Well, upstream names like ONGC are getting a huge tailwind from these prices. But on the flip side, it is severely crushing the margins for the OMCs, aviation sector, and auto manufacturers. Okay, shifting gears entirely here, because we really need to talk about the absolute standout anomaly of today's session. I mean, what on earth caused Patanjali Foods to crash 14.64% to a 6-year low? It was this spectacular drop on just massive volume, and honestly, it caught a whole lot of traders completely off guard. The sheer scale of the carnage is just staggering. Patanjali is sitting right at the absolute top of the F&O losers list, crashing all the way down to 348 on incredibly heavy volume. But here's where it gets a little absurd. Despite this monumental sell-off, which, clearly points to some kind of institutional derating or a massive technical breakdown, the company's official explanation to the exchanges was that there was, quote, no material event. Yep, absolutely nothing to see here, folks. Just your casual 14.6% plunge. Super reassuring stuff, right? All right, Section 2, Top Gainers and Losers. Starting off with the green side of the board, the power equipment and electrification crowd really caught a strong bid today. Power India and ABB both jumped over 4.5%, and that's being driven by some really robust T&D CapEx order flow. We also saw Force Motors pop up over 4.3%. Oh, and take a look at Swiggy, up 4.36%. This move was triggered because their domestic ownership just crossed that critical 50% threshold, which immediately revived a ton of chatter and hopes about index inclusion. Looking over at the biggest losers, well, moving past Patanjali's massive crash, we've got a few other notable names. Tata Elxsi continued its slide, dropping another 4.78% today. This is basically a direct result of that ongoing caution and derating we're seeing in the IT sector thanks to weak forward guidance. We also saw Adani Power giving back some of its recent gains, sliding 3.18% on profit-taking, and Delivery slipped 2.69%. That one's particularly interesting since they are literally just days away from a major impending acquisition close. Next up, Section 3, Portfolio Positions Update. So, reviewing the book's performance, our long positions in GE Vernova, TND, and Swiggy worked absolutely perfectly today. They rode those exact catalysts we literally just talked about to become top F&O gainers. Hindalco held pretty steady too. But I gotta say, our long position in Hindustan Petroleum, HPCL, remains incredibly awkward. It is basically a long position fighting the crude tide right now. It's operating totally counter to this rising oil regime, so we definitely need a very tight stop on that one. On the short side, though, things like Delivery, Vedanta, JSW Energy, and BSE, they're all leaning exactly the way we want them to. Moving right along to Section 4, Earnings Just In. Let me tell you, the financial sector simply delivered across the board today. It's incredible. ICICI Prudential Life saw their profit jump nearly 28%. HDFC Life grew by almost 12%. Angel One literally doubled its bottom line, up 102%. And HDB Financial posted a massive 38.3% profit growth. These insurers and NBFCs absolutely carried the tape today. Meanwhile, and we kind of saw this with Tata LC earlier, the IT sector prints just keep getting sold on weak guidance, completely ignoring the actual earnings beats. It really is a tale of two very different sectors right now. Finally, let's look at Section 5, the week ahead. Looking at the calendar, today we are keeping an eye out for Wipro, Tech Mahindra, Geo Financial, and Polycab. Tomorrow, July 17th, brings the absolute heavyweight, Reliance. But honestly, the real landmine is Saturday, July 18th. We've got a massive cluster of private banks reporting: HDFC Bank, ICICI, Axis, Kotak, and Yes Bank. With the tape acting this jumpy lately, a weekend dated dump from the absolute heaviest weights in the index, that creates some serious overnight gap risk for when we open up next week. Beyond the hard data, there is also some highly watched, though unverified, market buzz floating around that you really need to be aware of. First, Delivery's 1400 core Ecom Express deal is slated to close this Friday, which is going to kick off a massive 6-month integration drive. Second, speculation around a Reliance Jio IPO is really warming up ahead of their earnings print. And lastly, Vedanta's complex 4-way demerger is currently grinding its way through the allotment and listing phase. Just a quick reminder, guys, these are catalysts in the rumor mill right now, so absolutely make sure you do your own homework as these stories develop. And that brings us to our final big question for the day. Will the ongoing DAI cushion hold strong enough to actually absorb the potential shockwaves of this upcoming private bank earnings cluster? We've got a mildly positive tape, crude oil is swinging the broader market, and a massive wall of banking earnings is dead ahead. So what do you think? As always, remember, this explainer is strictly for educational purposes based on personal research. It's not investment advice, so please do your own homework before you execute any trades. Thanks so much for joining me today, and I will see you right back here for tomorrow's explainer.